Hello everyone and welcome to my daily report market videos on Friday the 10th of May with me, Richard Perry, market analyst at Hantec. Well, we've got the US has imposed tariffs on China, increased the tariffs from 10% to 25% on $200 billion worth of Chinese imports. Now, this escalates the trade dispute, certainly. However, there is signs of possible improvement in relations, and this has come through a letter that has been sent from President Xi to Donald Trump, and Trump described it as a very beautiful letter. So there is signs of hope, I suppose, within this, even though the US has certainly escalated the trade dispute. And you can see that through the fact that equity markets have bounced. You saw Wall Street bouncing into the close, well off the lows of the day, and that's being accounted through the European markets today. Look at the Chinese market. Chinese equities 3% higher. So there has been a significant reaction to this, and perhaps signs that there could be a better, an improvement in the situation that has deteriorated quite sharply in the last week. So subsequently, equity markets are higher. Not really any direction on Forex, basically flat on the day. I mean, sterling's a little bit of the underperformer, but apart from that, we're not really seeing too much. Little bit of dollar strength, but only marginal. And you can sort of see that through, well, I mean, the dollar index, for example, is actually lower at the moment, but to be honest, it's little real direction across yields, for example, across treasury yields, and to be honest, markets are fairly flat other than equities. Commodities are basically flat. Gold is hovering again around in the low 1280s. Oil has picked up. Oil has actually sort of managed to pick up a touch, but again, still in this phase of consolidation, really. So there's little real direction other than equity markets at the moment. It'd be interesting to see any news flow that comes out of Washington today regarding the trade dispute, and the impact that would then have on equity markets, because equity markets would be where you'd see the very quick response, I think. Now, in terms of data points today, we've got UK GDP at 9:30. The prelim reading of quarterly GDP expected to be 0.5% for Q1. You've also got the trade balance, which is expected to marginally improve to 13.8 billion from 14.1, and also industrial production expected to come up at 0.5% for March, up from 0.1% last month. February. But the main focus for traders today on the economic calendar is certainly going to be this US inflation. The US core CPI expected to improve a touch to 2.1%, but also the headline expected to improve to 2.1% as well. And that would start to turn around this deterioration that we've seen in US inflation numbers in the past couple of months, really. So that will be important data today to watch out for. Sorry, that's not the right chart. Anyway, so I will be then looking at my chart of the day, which is the Kiwi dollar. Now, the US dollar has tended towards strengthening, and what we have seen is the Kiwi dollar sort of reflective in that. Whereby the Kiwi has been weakening in this downtrend channel over the past 6 weeks or so, and that downtrend channel has been forming lower highs, lower lows, but also breaking below that support at 65.90, which had been a bit of a floor. Now, that floor becomes overhead supply. When you look at the momentum indicators, it would certainly suggest that rallies are being sold into on the Kiwi throughout this downtrend channel. And you've got that across momentum indicators. A little bit of a tick higher on RSI and stochastics, but nothing really on the MACD lines, and nothing really to suggest that this rally that we saw today to 66.13 is not just another selling opportunity. You can see on the hourly chart, a little bit of an improvement, but again, can it sustain the improvement, really, and I would suggest that it probably can't. And I think this rally that we have back to 65.90 is a selling opportunity. So you've got the reaction high from this week at 66.30, which is basically where we see that downtrend channel today, 66.20. Another key reaction high at 66.50. So you've got resistance overhead to prevent this market from going too much further. But generally speaking, throughout the last few weeks, the rallies have unwound towards the low 40s or 40, 42 area on the RSI. So there is a little bit of room you could see, but I think that any rally is still a chance to sell on the Kiwi. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.